We have hit extreme fear in the market, and we've been there for over a week straight now. If you've been keeping up with the market in the last 2 weeks, you already know that we've got a decent sized pullback, not quite in correction territory, but a decent sized pullback, and the major indices are down more than 5%. The NASDAQ since February 19th is down 8.831%, and the S&P 500 since February 19th is down about 6%. Now 6% and 8% don't really sound that bad of a drop, but remember, if you're an individual stock picker, you've experienced this. Anytime you have a pullback or a correction or even a crash, the stocks that go down inside of your portfolio that are individual companies, some of them are going to go down way more than the index. There's some stocks out there that'll do double as bad, triple as bad, quadruple as bad as the index. For example, Palantir. A lot of people on my channel are Palantir shareholders. Very hot stock over the past few years. If you look at Palantir on a 1 month basis, the stock is down 18.71%. And if you look since February 18th, the stock is down 32%. That's way, way more than the index, of course. So some of these higher beta companies like Palantir, like SoFi, like the Trade Desk, etc., these stocks are going to get hit way harder in a market correction or even a market crash than the major index would. So that's just something to keep in mind for future corrections or future crashes. It's not something to panic about. These are high beta companies. They move more than the market. It's very normal for them to drop a lot more than the index, and it's normal for them to rise a lot more than the index. With that higher volatility, the downside is accelerated and the upside is accelerated. But what I want to do in this video is talk about the worst thing to be doing right now and the best thing to be doing right now. And since it's been a minute since I've been on YouTube, I want to update you guys on my current buys. I'll take a moment to chat about the stocks I've bought over the last 2 weeks. I'm not going to go super in depth on each one, but I am going to mention each one of those individual stocks and what I think is attractive about that stock in this moment. All the members of the Patreon get notified every time I open a new position or anytime I substantially increase an existing position. And I always talk about what stocks I'm buying in that moment and what stocks I'm selling in that moment. So if you're interested in hearing that and getting a much more real-time update of what's going on in the market and what I'm doing with my portfolio, go ahead and consider checking out the Patreon with the link in the description and the pinned comment down there. We appreciate you. We'd love to have you in there. All right, let's jump into this video. The worst thing I think you could possibly be doing in your portfolio right now is going along and buying in to the fear that we're seeing out there. Like I said, the CNN Fear and Greed Index says that we have extreme fear right now, and we have for more than a week. So if you're out there selling stocks, selling into the weakness, I think that is the worst thing you could possibly do right now. If you're a newer investor to the market, you might not have seen that many major drops in the market. So this drop might be scaring you. This might feel like a really big deal. I'll tell you right now, a 6% drop in the S&P and an 8% drop in the NASDAQ is really nothing to freak out about. In 2022, just a few years back, we had a major crash. That was a true crash, not just a pullback, not a correction, but a genuine crash. We were down more than 35% on the NASDAQ. I don't remember the exact number. From top to bottom, it was more than a 35% crash. And that means that some individual stocks out there went down 40%, 50%, 60, 70, 80, or 90% inside that crash. That can feel devastating. That can feel really, really scary if you haven't ever been through a crash before. I also understand that a pullback can be scary if you've never been through a pullback before. But I just want to put it in perspective. This is really not a huge deal if we keep on getting selling pressure and we end up getting a 15% drawdown or a 20% drawdown. That can feel a little more intense. Worst case scenario, we should at least be holding all of our shares through a crash. Assuming you're holding quality companies and you're holding these companies for the long term. Me personally on this channel, I talk about long-term investing. I'm not trying to get in a stock this week and get out of a stock next week or a few months or something like that. When I'm buying a stock, I'm thinking I'm going to be holding this for years and years to go in the future. So if I was buying a stock, and let's say I was buying it at $100, and then we get a market correction and that stock drops 15 or 20%. Now I can get that at roughly $85 or $80. I'm definitely going to love that pricing a lot more than I like the $100 pricing, especially if the drop we have is from a broad market pullback. A broad market pullback does not dictate the company I'm buying's fundamentals, right? I care about the company I'm buying's fundamentals and the valuation it's sitting at. So if I can get the valuation lower, even though the fundamentals of the company haven't changed at all, that's a great thing for me as a long-term investor. I can increase my position with that company so that whenever we get out of this crash and we start to move up again, I'm going to be able to be more of a beneficiary of that upward rise. So you can probably tell that I think the best thing you could possibly be doing right now during this little market pullback or this correction, depending on how far we drop over the next few days or weeks, is buying stocks that you love at lower prices than you could have gotten them 2 or 3 weeks ago. For quite a few months leading up to this pullback, my buys were very, very light. I was still buying each and every week, but my buys were pretty light. I was just nibbling on a few shares, some stocks I liked at prices I like, because that's what I do. I buy stocks I like at prices I like. But as the market weakened and we got more and more price weakness, the heavier and heavier I've started to buy. This past week was my heaviest buys I've had in quite a few months, and I ended up buying a total of, 7 stocks out there. I'll talk about those 7 stocks here in a little bit, but the important thing is, since I was able to build up a bunch of cash in my accounts and just be patient, I was able to nibble on a few shares just in case we didn't get this pullback, but I expected that at some point within Q1, we would get some kind of a pullback or a correction or potentially a crash. We've got that now, and I'm out there deploying capital. In the grand scheme of stock market investing, every pullback is a buy. Every correction is a buy. Every stock market crash is a buy, okay? That is just the truth. That is how I feel as a long-term investor. I'm very bullish on the market over the long term. So to sum it up very simply, before I talk about the 7 stocks I've been buying, don't be a seller right now, be a buyer. If you wanted to buy a stock 3 weeks ago and the stock was $100 and now the stock is $70 and the fundamentals haven't changed at all, it's a much better buy at 70 than it was at 100. This is a gift. Almost every pullback, every correction, every crash is a gift. Go ahead and buy very high quality stocks that you plan to hold for the long term. Fundamentals still reign supreme no matter what. It's not just a buy everything in sight type situation. It's still buy quality companies that you see that have a strong moat, that have strong fundamentals, that are at a valuation that you like, etc. But I'll just speak for myself. Being a buyer when everyone else has been a seller, when there's extreme fear in the market, I'm buying stocks like crazy. That has benefited me in such a crazy way, it's hard to even explain. And I want you to experience those same type of gains. So make sure you're doing the fundamentals work, you're finding those solid companies that can weather any financial storm that we go through, and hold those babies for the long term and buy them when they drop. If we get a broad market pullback, it is time to buy, it is not time to sell. All right, so let's talk about those 7 stocks that I've bought over the last few weeks. And some of them I've bought very, very heavy. So the first one, this is a brand new position for me, is the Trade Desk. This is ticker TTD. This is definitely a growth play. This is a stock I've wanted to buy for many, many years, and we've gotten a crazy drop recently. As of a few days ago, I made a Patreon post. The stock is down over 40% year to date, with almost all of that coming after their earnings in February. Their guidance came in below expectations and the stock dropped like crazy, but I ended up buying my first shares around $70, and I just continued to add heavier and heavier as the stock dropped a little bit more, down to roughly 65. With the over 20% revenue growth they've got, over 100% net income growth, and the very strong moat they have in the advertising space with their demand side platform, the DSP as they call it. This is extremely strong buy for me right now. It's the stock I've been buying the heaviest over the last week specifically. The next stock is a pure valuation play, and actually one of the members of the Patreon put me onto this stock not that long ago, and this is Next Tracker. It's ticker NXT. Their solar software platform is a best of breed product and very much a global product, as 33% roughly of their revenue, depending on the quarter, is coming from outside of the US, with about 67% coming from inside the US. Once again, that depends on the quarter, but I love to see that. And the valuation is just too attractive for me to stay away. With over 20% revenue growth and over 150% EPS growth, they're sitting at only an 11.52 forward PE and a 0.79 forward PEG ratio, price to earnings growth. Anything below a 1 is considered very, very good. The S&P 500 as a whole, the average stock in the S&P 500 is above a 1 on a trailing basis. So we're looking at a stock that on a forward basis is well below 1 at a 0.79. The future earnings growth is not being factored into the share price right now. I would say this is an undervalued asset. I had to step in. Very attractive from a valuation standpoint. I also bought Nubank stock last week. Nubank is a stock I've been buying for a few months now, and I had been buying a decent amount of shares, but But as we got this market weakness, I've been increasing my buys substantially. Nubank is a fintech. This has some of the craziest growth you'll find out there, and it's a fintech that functions outside of the US. The three countries they serve are Brazil, Mexico, and Colombia, and they're announcing new markets later this year. I don't have any specific details on where that's going to be, whether it's North America, Latin America, South America, Europe. I'm very excited to see what new market they're going to announce, but every single time they've launched a new market, it's been a crazy growth catalyst for Nubank. I love the valuation we're seeing it right now in comparison to the growth. If the stock continues to drop, I'll continue to buy. Next up is an AI player and definitely a turnaround play. AMD. This is a stock that has been hammered way too hard. When we look at forward growth and forward valuation metrics, the stock is looking like it's in deep value territory. The market has got some AI fatigue, I think, and AMD has not been able to put up the type of numbers that like Nvidia is putting up. Every time AMD reports something, even if it's great numbers, it's like, well, Nvidia's over there growing 70%. They're over there growing net income by 150%. What's AMD doing? Oh, 20%? Everyone just writes them off like it's nothing. 20% growth is still very solid. It just seems like AMD has been overshadowed by Nvidia in a major way, and I see it as a definite turnaround opportunity. I could see this stock being somewhere between $150 and $180 within the next 6 to 18 months. And then the last three stocks I've bought recently are definitely stocks you've heard me talk about before if you're a frequent watcher of the channel. Vital Farms, the butter and egg company. Bird flu is definitely a scare right now for any egg producer or egg seller. Vital Farms fundamentals have not been affected at all by the bird flu. It's just fear around it. So it's a fear-based drop along with this broad market pullback. We've gotten quite a large drop in Vital Farms share price. Most of my shares were bought somewhere around $15 a share or lower than that for Vital Farms. And the stock is about $30, but I was still buying today. At over 100% gain on my shares, I was still buying. This is my favorite small cap stock in the entire market. And in my opinion, it's the best run publicly traded food company on the entire stock market. Vital Farms' growth prospects over the next 5 to 10 years are absolutely ridiculous, and I can't wait to see what they do over that span, and I will be a shareholder for all of those years. Next one that you might have heard me talk about that I've bought recently is Upwork stock. This stock has gotten to a point in terms of valuation that I was excited to buy new shares again. Upwork is absolutely an EPS growth story, a net income growth story. As those net income numbers get better and better, the stock is going to get more and more respect. This stock doesn't have like crazy revenue growth. It's not like it has 20% plus revenue growth. It's a single digit or maybe low double digit grower, but on the bottom line, the net income, they've got 20, 30, 40, 50% growth depending on the quarter. It's been extremely strong and they're staying committed to that. If you've been in the market for a long time and you're a long-term growth investor, you know that stocks follow earnings over the long term. Upwork is focusing on those earnings numbers getting better and better over time. And then the last stock I bought over the last 2 weeks, this is my lightest buy over the last 2 weeks, is Hims & Hers Health. That's ticker HIMS. I've been a buyer of this stock on and off for more than a year now, and with a $17 average cost per share, it's a very nice gainer for us, over 100%, but I'm still out there buying new shares. I don't know if we're going to get HIMS anywhere below 25. I would love to have HIMS shares below $25. But I'm not going to wait and sit on the sidelines and not build my position any larger just to wait for that $25 mark to be hit. So I'm buying a little bit here and there with HIMS because I do still want to increase my position. But if we're talking about 5 to 7 to 10 year potential with a stock in terms of upside, there's not that many opportunities I see out there that are better than HIMS. Let me know what stocks you're out there buying. Over the last few weeks, have you been buying heavy? Have you been buying light? Do you think this downside is going to accelerate until we're in correction territory and crash territory? Or do you think we're about to move up from here? After hours, the day of recording this video, we've gotten nice upward moves. So some people are talking about how maybe this is the end of that pullback and we're up and away from here. I don't necessarily believe that. I want to hear what you guys think. Do you think we have more pain ahead? And what stocks are you buying out there while we're seeing these price drops? Looking forward to seeing your comments down there. Definitely one of my favorite parts of posting here on YouTube is having some conversation in the comment section with you guys. And if you want to continue that conversation a little deeper, consider joining the Patreon with the pinned comment down there and the link in the description. I appreciate you being here in a major way. Thank you so much. Have an amazing day.